Hey guys, it's Loy here and this is Crypto Insider. In this video, I will explain to you why most crypto traders lose money in the long run, especially if they invest in mostly altcoins. So let's just say the average crypto trader only has about 2,000 US dollars to invest. And to play it safe, most crypto traders tend to diversify their portfolio in the top 20 coins. And for example's sake, most traders got into, or the average trader got into crypto early 2018 after seeing Bitcoin hitting almost $20,000. So in this case study, um, for example's sake, we will set the start of the investment date on the 1st of January the 1st, 2018, and the uh, the ending date of June the 30th, 2021, which was just the end of last month. The HODL duration is 3.5 years. And on the 1st of January 2018, these were the top 20 coins. We excluded number 20th, which was BitConnect, because obviously BitConnect went to zero. So instead we use the 21st ranking, which was ICX icon. So these were the price of these top 20 coins in January 2018. And for reference sake, you can check this URL to fact check this example. And um, these were the price ending last month, June the 30th, 2021. And what you notice is, well, for example, before I even go through the profitability, let's just say with 2,000 US dollars, we will invest $100 in each coin. And this is generally what people do. They try to diversify their portfolio. They try to put equal amounts in every coin. Obviously, this is just a example sake. In reality, people's not going to put exactly 100 in each, but just for example sake, we have to do this. And so 3.5 years later, what is interesting is only 25% of the coin actually turn a profit. And yeah, it's quite shocking actually. And we actually made a loss, a 25% loss. So 3.5 years hodl or holding, it's a long time. And seeing your portfolio go down in 25%, when you can probably make a lot more money buying in the maybe the stock index or the S&P 500. Yeah, it's quite alarming actually. Yeah, so as you can see, that's the reason why in this channel I always been telling you guys that HODL does not work. Buying or FOMO definitely does not work. You don't want to buy near the top. And buying every dip is just as bad as FOMO, because the dollar cost average isn't going to be that great. By the time the crypto bottom, your dollar cost average is probably like somewhere in the middle of the all-time high price, and that's crazy when considering most of the altcoins in 2018 dropped anywhere between 90 to 99%. That is just the reality. And also another crazy statistics that you can fact check yourself is about 98 to 99% of altcoins that was released in January 2018 or before the crash never recovered its January 2018 all-time highs, and that is ridiculous. 98 to 99% of altcoins that was released before the 2018 crash never recovered. and that's just simply just the facts. So, you're wondering, okay, so smartass, if HODL does not work, what can we do? And yes, I have a solution for this. And um, you can either learn how to analyze the market cycles, because market cycles do exist in crypto, because crypto works runs similar to gold. Yeah, Bitcoin and crypto. The closest thing to crypto is probably the gold market, but obviously crypto is like digital gold. The volatility is like 10 times more, and the cycle is roughly 2 times faster. So the gold cycle is roughly 7-8 years. Crypto cycle is 3 to 4. So knowing this, instead of hodling, what can we do? So what I teach and so I'm based. Most of my trading is based on analytics and data. I'm a very data-driven trader, and obviously I look at technical analysis as well. So we recommend swing trading, um, trying to buy in at as close as possible to the major cycle lows, and we actually managed to get the last two bottoms for Bitcoin and Ethereum in December 2018. Bitcoin was about 3,000. We got quite close to 3,000. It was like maybe 3.5 or so, because it didn't stay there for long. And the second bottom, the double bottom, was obviously June 2019. At sorry, not June. First bottom was December 2018. Second and second Sorry, first bottom was December 2018, and the second bottom was March 2020, which Bitcoin bottom at 3.8 thousand. So yeah, you don't obviously in real life it's hard to get the exact bottom, because when Bitcoin or crypto drop, it doesn't stay there for long. But we managed to get quite as close as the bottom as possible, and we actually bought the same day the Bitcoin and most alts actually bottom. So and when you buy in at the major bottom, then you can hodl. You can hodl, and you can probably buy every dip for the next few months after that, and try to hodl as long as we can until the next major top. And getting the next major top is a lot harder than getting the bottom, but I believe I would be able to get close to the next major top when the next bull market starts. So yeah, this is just, I made this video so you guys can, it's an eye-opening video, because you realize that all these people telling people to hodl and all that crap, it's all BS, because you can't argue against real data, and this is literally the typical, what a typical average crypto investor does when they invest. They don't just buy Bitcoin, all right? No one's gonna just, well, maybe some people do, but uh, you know, this is based on the typical crypto trader, okay? So yeah, hope you guys learned something today, and hopefully you guys don't FOMO and don't hodl with especially on shit coins. And think about it: if this is the top 20 coins, what hope would you have for something that is not even top 20? Let's say top 50 or top 100. It would probably be a lot worse in terms of your loss. So yeah, hope you guys learned something in this video, and if you like this video and want to see more, please give me a thumbs up, and If you want to see more videos in the future, click on the subscribe button and make sure you click on the bell icon so you get notified every time I make a new video. Thank you, and see you guys in the next video.